Welcome to the Daily Insights that matter. In a recent development, OPEC Plus, which groups the Organization of the Petroleum Exporting Countries and allies led by Russia, reached a deal on output policy and agreed to extend earlier cuts in oil supply through the end of 2024 by a further total of 1.4 million barrels per day. While OPEC Plus has decided to maintain its planned oil production cuts for the remainder of the year, there is an interesting twist from Saudi Arabia, the world's leading oil exporter. They have chosen to go the extra mile by announcing additional voluntary output cuts that will be put into effect starting in July. Consequently, Saudi Arabia's daily oil production will decrease from around 10 million barrels in May to a lower output of 9 million barrels per day. That's a production cut of 1 million barrels per day. So why has Saudi Arabia cut oil production? Demand for oil softened on the back of weakening economic activity due to the pandemic. Demand has now come back. Early in 2022, and with meaningful supply concerns surrounding Russia-Ukraine, the oil prices were at all-time highs. Soaring energy prices have caused massive inflation and has prompted the central banks to hike interest rates. These higher interest rates are slowing the economy growth, especially in the euro area and the US, which is subduing demand. Now, oil prices have fallen from multi-year highs. There are concerns about economic weakness in the US and Europe, while China's rebound from the COVID-19 restrictions has been less robust than many had hoped. Because the outlook for oil demand has weakened, Saudi made a move of cutting production, showing they remain serious about supporting prices. So there you have it. The recent decision by OPEC Plus to reduce production targets and Saudi Arabia's additional voluntary output cuts are all part of a grand plan to support oil prices in a world of weakened oil demand. The impact of these moves on global oil prices will be nothing short of captivating, and we'll be keeping a close eye on how this story unfolds. As the world shifts towards greener energy production, there is a growing need for grid-level energy storage systems. The Indian government has recently unveiled an ambitious plan to provide a 15,000 crore rupees PLI scheme in promoting the development and deployment of grid-scale batteries. So what are grid-scale batteries? These are battery energy storage systems, or rather BESS, that can store renewable energy and release it at a time of high demand to maintain grid stability. They make sure the flow of power continues at a regular frequency. As India has an ambitious plan of bringing in a green revolution in the country, the need for battery energy storage systems are also significantly important. This will require massive investment starting from fiscal year 27. The total investment across the 5-year period would be close to a whopping 3.5 lakh crore rupees. India aims to achieve a green energy capacity of a massive 500 gigawatts by 2030, and storing this energy has become crucial. And to tackle the issue of stabilizing the grid, BESS or grid-scale batteries will play a key role in integrating the energy into the grid. Indian researchers are on a drive to explore new chemistries for battery storage and reduce the dependence of lithium imports from China. Hence, the government is taking steps to boost the manufacturing of storage systems in the country, and a PLI scheme would support the capacity addition. While I say this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.